Hello everyone, my name is Zahid Sayed. Thank you very much for joining. I'm going to talk about something called no limit TFSA for business owners. Now TFSA is usually for individuals, so they can put a certain amount every year and grow money tax free. It's very popular in Canada because the tax free growth, and when you take the money out, there is no tax to pay. But for business owners, actually there's not such a thing that can grow money tax free within the business account. So I'm going to give you a strategy that works like a TFSA, but it has a no limit, and you can use that one in Canada and it's a totally legal. So let's talk about when it comes to a tax free term in retirement and estate planning. It doesn't exist. Every time you take money out of RSP or something, it's going to be fully taxed. So we want to, look at this different strategies that can grow money tax free, and also when you take out is tax free. Now in Ontario, if you make over $220,000, you are almost 53.53 tax bracket. So that's mean that's on your income. But if you take money, if you grow money into different stocks and bonds and GICs or and within the corporation, that's also going to be taxed. So it's not only your income is taxed, but it's also the money you grow within that those accounts are investments, that's also taxable. So average family in Canada, if they make say $88,000, so there's a different taxes they pay, income tax and payroll taxes and tax on profit. Almost $39,000 goes into taxes. So that means that almost 44% of average family income, if they make 88,000, goes into different taxes, including city taxes and everything. So that's why business owners, what they do, they have the ability to pay corporate tax. They take only what they need and leave the money in the business account, so they can grow that money from there. But the problem is, as soon as you invest corporate money into some investment, that is you pay highest tax bracket, like 50.17%. So because government wants you to either invest back into business or take out and pay taxes. So there's only four things left in Canada which are tax free. One is, of course, principal residence. Second, which is they are thinking about also taxing the sum of the capital gain. Another thing is the lottery winning. Good luck if you can win lottery, that would be a tax free. And there is no exempt life insurance policy, which a lot of people don't know is also you can grow money within the life insurance policy tax free, which is there should be everybody should know about that. Of course, there is a TFSA tax free saving account, but again, TF has a limit, and you cannot go beyond the limit. So let's talk about the problem. This is what the problem with the TFSA is, because there is the limit. But we're going to talk about something. You're going to use a life insurance strategy for a business owners, so they can have no tax-free saving account and no limit tax-free saving account for their business. So most people know insurance, but they don't know what it does. So, they don't look at the nitty-gritty of the business, for the insurance, and they don't know how you can utilize that insurance policy to grow your wealth. Now, there is something called corporate life insurance. When the corporate life insurance, you can buy life insurance actually under the corporation. So if you are a professional or a corporate owner, after you pay your income tax and whatever retained earning, you can actually buy a life insurance under that and can grow tax-free, because you need a life insurance anyway for your family and a business. So that allow you to put more money every year in the insurance policy, and it grows tax-free like TFSA. So you can set up your own TFSA through your life insurance and dump money. And I'll show you for example of Jones family, for example. They have $100,000 in the corporation every year that they don't need to run their business. But if they take money out, they have to pay taxes on it. So now we're going to use a corporate life insurance policy to dump that money, $100,000 every single year for next 10 years. And that because if they invest somewhere else and they make any money on it, they are going to pay almost, it's called passive income. So they're going to pay 50.17% tax on that money they would invest. So we are going to take that example of $100,000 within the corporation, put in the insurance policy versus taking money out, pay dividend tax, and then invest. So if they would have taken money out and say they get around 4% rate of return on their investment, that the average rate of return, they would, end of the day, after 25 years, with all the taxes they're gonna pay on their passive income and then take money out, that'll be almost $990,000, which is, you notice, is less than the money they put in. Because $100,000 for 10 years, $1 million, but they would have around 990,000. Now let's use this corporate life insurance to do the same thing like a TFSA account. So we put that $100,000 through the corporation in the policy. So in 25 years, if God forbid something happened to them, maybe we buy a last to die policy, which we use for estate planning purposes. So we would have approximately around $2.8 million versus $990,000 from the family. So now you have insurance policy set up. At the same time, you grow money tax free, and you would have leave for the family around $2.8 million. That's fantastic way of growing your money within the corporation and paying out tax-free under what we call a capital dividend account, which is a tax-free account from the corporation to the family, so you can transfer that wealth. So now we're going to look at a different way of paying for the life insurance policy. Of course, we have to pay for the cost of insurance, but in that 100,000 includes that cost of insurance. Now, there are three ways to pay the corporate owner can pay. One is what we call a cash flow. And another thing is you can reallocate a taxable assets or other assets to pay for the premium. But business owners need that money, put it back into business if they can. So there's a strategy called immediate financing arrangement, IFA. So IFA does basically, we set up a life insurance policy. We put it 100,000 for say 10 years. So we go to another bank like a TD or BMO or some other banks. They provide that loan to the corporation to pay the premium, and they will pre-approve you for almost $1 million, which is 100,000 for 10 years, $1 million. So you don't have to go every year and get approved. You are pre-approved. So what you do, put the $100,000 policy premium in there, go to the bank with the receipt, get that 100,000 from them, put it back into business, and you pay them a very low interest cost, which is right now prime plus half or something, 2.7%. So, and that changes with, the interest rate changes like on our variable mortgages. So, now what you do, you put that in, you make more than, of course, 2.7%. You'll make maybe 10, 15% of your business if you can. No, because you borrow to invest back into the business, the interest cost of that that policy, the loan that we are taking is tax deductible. So it's actually half of costing you almost half whatever you are borrowing. So it's a very great opportunity. So it's give you cash flow, and also it's give you ability to dump money in and let it go tax free. And I think this is a fantastic strategy for some of the business owner. And of course, it probably the total cost of the policy would be maybe between net around 2 to 3% of what would cost you if you put money from your pocket. So it's a great way to utilize immediate financing arrangement to fund that policy and have unlimited TFSA. Now you can put a 200,000, 300,000. Would that other TFSA would allow you? No. So we were an individual also can do it, and we'll in our others, another discussion we will use how individuals can use to. But I was focusing on the business owner how they can use. So but you don't have to do this alone, and you can't, because there's some things needs to be done to make sure this is done properly. And as a professional, I have been trained. I've been in the business for 20 years. I'm a chartered life underwriter, also a health insurance specialist and master financial advisor, philanthropy. So, we have the know-how how to do it. So after this session, we would give our name and number, so you can give us a call and we can show you if that strategy can work well for you. Thank you very much for joining, and I'll talk to you next week. Bye-bye.